EUL Euler is set to pump or dump. It explains what EUL is, the protocol background, tokenomics and supply mechanics, market signals that could drive a pump, warning signs that could trigger a dump, on-chain indicators to watch, exchangeability considerations, governance and news catalysts, trading strategies, and a clear risk layer so viewers know what to do. Euler's EUL token is the native ERC20 governance token of the Euler lending protocol, a permissionless, modular money market designed to support a wide range of assets and custom lending markets, and that context matters because EUL's price action is tied not just to general crypto sentiment but to protocol adoption, TVL, revenue, token emissions and governance events. So before asking pump or dump, we must first agree on what EUL is and how its mechanics create both upside and downside risk. Euler's documentation describes EUL as the governance token used for fee auctions, rewards and voting power over protocol upgrades and treasury decisions, which means protocol decisions and reward mechanics can directly influence token demand and supply. Euler docs. Historically, Euler has had a turbulent past. It suffered a major exploit in 2023 and subsequently relaunched and restructured. A history that matters because past security events can depress valuations and create long-term trust issues, even after fixes and audits. But since the Ray launch, the protocol has shown signs of recovery with rising TVL, new integrations and partnership activity that can act as bullish fundamentals if the momentum continues. Now, when traders ask if EUL will pump, what they're really asking is whether demand will outpace supply in the short term and whether there are catalysts to push price higher. Fast pumps are typically caused by one or more of the following: sudden exchange listings or market maker support which increases accessibility and liquidity, a positive governance decision or protocol upgrade that expands utility, a spike in protocol metrics like TVL or revenue, coordinated social or influencer ascension, or whale accumulation that reduces circulating float. For Euler specifically, exchange listings, Coinbase, Kraken, Upbit and others supporting EUL markets and positive TVL revenue headlines can be powerful pumps because they create both FOMO in retail and legitimate on-chain demand from users interacting with the lending markets. Coinbase 1 on the other hand, dumps occur when the reverse happens, major sell pressure from whales or vested token unlocks, large holders or investors exiting, negative security news or bugs, sudden outflows from the protocol, shrinking TVL, delisting rumors or actual delistings, or macro crypto market sell-offs that hit risk on assets hardest. For Euler, the memory of the hack means security rumors or new exploit reports can trigger outsized downside even if the underlying fundamentals are improving. Axios. Given those dynamics, a practical script looking for a pump would outline concrete, watchable triggers, increasing TVL week over week indicating real user demand, meaningful partnerships or new markets, e.g. EUC 4626 vault integrations or cross-chain deployments, exchange listings or new fiat pairs that expand buyer access, visible on-chain accumulation by non-exchange wallets showing holders are taking tokens off-chain, rising daily active governance participation or fee flow auction activity that implies token utility, and improving revenue numbers and borrower activity that show the protocol is monetizing. Any cluster of those events in a short window can create a momentum-driven pump because they provide both narrative and numeric validation to traders and investors. Conversely, the script should warn about dump signals to avoid being caught off guard, sudden spikes in sell volume on centralized exchanges, large wallet transfers to exchanges which often precede selling, announcements of major vested token unlocks or founder VC sell windows, negative audit findings or security vulnerabilities, unexplained TVL outflows or reductions in revenue, and broad crypto market deleveraging events. If several of those appear at once, they commonly create panic selling and accelerate a dump. To make the analysis actionable, the narrator should walk viewers through the specific on-chain and off-chain metrics to monitor in real time. Check circulating supply versus total supply and upcoming vesting schedules. Tokenomics pages and tokenomics style trackers show how much supply may enter markets. Watch whale trackers for large transfers. Monitor exchange order books and bid-ask spreads for sudden widening. Liquidity drying up often worsens dumps. Follow protocol TVL and revenue dashboards. A rising revenue runway can justify higher token valuation while falling revenues should be a red flag. And use social sentiment tools and on-chain social metrics to see whether mentioned volumes are organic or bot farm driven. Organic sustained interest is healthier than a sudden, artificially amplified narrative. Tokenomist 1 for viewers who like technical analysis. The script can layer TA on top of fundamentals, Identify key support and resistance zones on multiple timeframes. Look for volume confirmation on breakouts. A price move without volume is suspect. Use the SI or MACD divergences to spot weakening momentum that can precede dumps, and place stop losses where an objectively invalidation of your thesis occurs. For example, if you're trading a breakout above a prior resistance, define a clear stop under that level size to your risk tolerance, and don't let FOMO push position sizes beyond what you can emotionally and financially handle. The narrator should also give examples of common pump and dump patterns and how to spot them in EUL's context. Extremely rapid price rises on low liquidity with exaggerated social chatter often correspond to coordinated pumps. Examine whether the on-chain flows show equal buys across many small wallets, possible organic retail interest, or concentrated buys from one or a few wallets, possible manipulation. If you see transfers from unknown wallets into exchange custody immediately after a parabolic run, that's a strong sign that a dump is underway or imminent because profit-taking is being coordinated. Likewise, watch for repeated wash trade volume spikes on smaller exchanges which can create the illusion of activity without real external demand. Governance events deserve separate attention. Because EUL is a governance token, proposals that materially change fee allocation, emissions, or token utility can be major catalysts. A popular proposal increasing rewards to depositors or introducing new productive uses of EUL could draw capital into the protocol and lift price, while proposals perceived as dilutive or that shift treasury assets in a controversial way can trigger sell pressure from cautious voters and markets. Euler docs, when producing the on-screen script, give viewers precise watch phrases they can use in real time. EUL TVL 10% week over week, exchange inflows x EUL, whale accumulation y days, no large vesting unlocks in next 30 days, potential sustainable pump setup, and conversely large exchange inflows declining TVL negative auditruma high dump risk. Explain how to set alerts on on-chain explorers, block explorers and portfolio trackers for large transfers, and how to use exchange API order book snapshots to spot diminishing liquidity. Provide practical trade plans. If you're a momentum trader, scale into positions as volume confirms a breakout and take partial profits at measured intervals. If you're a swing investor, anchor position sizing to fundamental conviction. Do you believe Euler's product adoption will grow? And consider dollar cost averaging rather than chasing parabolic moves. Always size stops to a percentage of the portfolio you can stomach losing, and consider hedging with stable counters or inverse products in extreme volatility. Importantly, stress risk management and the emotional side. Pumps can turn into violent dumps in minutes, so don't let greed erase discipline. Set rules e.g. Never risk more than 1% of capital on a single trade without hedges, and be ready to tighten stops as a position becomes profitable rather than moving them away. For consent credibility, the narrator should reference trusted sources when calling out facts, protocol docs and white papers for token utility and mechanics, reputable price aggregators for market cap and circulating supply, and independent research platforms. Mesari, CoinGecko, CoinMarkets for TVL, revenue and recent news. Cite those sources on screen when making claims about TVL increases, revenue highs, or exchange listings because viewers should be able to verify. CoinGecko to CoinMarkets to offer viewers a checklist at the end of the monologue that answers pump in 3 buckets: green, conditions that favor a pump and potential trade plan; yellow, uncertain conditions that require caution or smaller positions; and red, clear dump signals and exit plans. A sample green checklist might include notable exchange listing or fiat pair added, TVL and revenue rising, non-exchange wallet accumulation, no imminent large unlocks, and positive governance votes expanding utility. Yellow might include improving fundamentals but thin liquidity or mixed social sentiment. Red might include massive exchange inflows, large wallet transfers to exchanges, audits revealing issues, or sudden TVL contraction. Make the closing of the script educational and ethical. Remind viewers that discussing pump or dump should never be encouragement to engage in market manipulation. Instead, this analysis is about recognizing market structure and protecting capital, and end with a clear risk disclaimer that past performance is not indicative of future results and that viewers should do their own research and consider consulting a licensed financial advisor for large allocations.